the key point is there, you're partnering with people who specialize in those different market classes. So you're able to really excel as well.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, as always, on these wacky Wednesdays, we got Matt Jones, co-host. Matt, how you doing, man?
I'm doing fine. How about you, co-host Todd?
I'm doing good. So, Matt, what are we going to talk about today?
Well, we're going to be talking about how you recently went into retail, kind of ventured away from multifamily and senior assisted living. And so I think our listeners would want to know, like, why did you transition to, not necessarily transition, but start doing a little retail?
I was going to say, let's make sure people don't. Well, I didn't transition. I went into retail. It's interesting. I had a phone call with an investor and a potential investor, and he was talking about kind of some of his criteria. This person has invested in a lot of different deals and was talking about how they would never invest in somebody's deal if it's the first time, even if they've got experience, even if they've done a lot of deals, they would never invest with somebody who goes from, like, let's call it multifamily to retail. He would never invest in that first retail deal. He would wait until they have at least one retail deal under their belt and can show some success. And that's actually how we approached this deal, because I would say the same thing. I would never invest in a retail deal or a industrial deal or you name it if you don't have experience in it, some sort of experience in it. Go ahead and do something small. That's fine with your own money. But when you're bringing in investors' money, you want to be careful. And so that's how we approached this deal, quite frankly, is we had another group, Obsidian, who we partnered. They're a local Twin Cities real estate investment company. And we partnered with them last year on an office industrial building, which has done really well. But who knows, we might sell. If we right now looking like we might be able to get a pretty good price. But if we keep it, it's going to cash flow wonderfully. So it was a great experience. Things went really smooth with that asset. And, this opportunity came about, and it was, again, I'm not going to invest in retail without having that experience, but with having an experienced partner, Obsidian, and we partner with another gentleman, Mark, NPR. So them together have just a wealth of knowledge in the retail space, lots of experience, lots of, exits, and have done really well. And so, and one of our partners is the broker and with Mid-America, which is also our property management company, who's doing all the leasing and the market research and all that kind of stuff. And so it works out really well in this case for us to then transition to do in a retail space, or last year doing that industrial office building. And it makes a lot of sense. It also allows us to present a different opportunity to our investors, right? Our investors are very used to our multifamily properties and they love our multifamily deals, but they don't get a lot of access to all alternative assets outside of multifamily. And this allows them to diversify their portfolio a little bit and mitigate some of the risks.
Yeah. And I mean, that makes sense, especially with, different asset classes are on different market cycles as well.
Yeah. I mean, different assets. Yeah, exactly. Different market cycles. There's different risk profiles to multifamily versus retail. There's just different value add opportunity. There's a lot of differences between them and some strengths and some weaknesses between both of them. But we really liked what this opportunity was, and we can dive into a little more details of why we like retail. And so I'm talking to the listeners right now, and I would really caution the listeners to jump into something they're not super familiar with, something they don't have the experience with. I just did, but again, I partnered with people that have a lot of experience in retail and the previous year in office industrial. And the reason why I would say that is because, who knows, Matt, but I feel like we're probably heading into a recession. Who knows how that'll affect multifamily, retail, office, industrial, you name it. But if we're heading into recession, you just have less margins. I feel like real estate prices are at or near a peak, and we might see a little bit of a valley. I personally don't think it's going to get super deep, but it could. But regardless, I feel like have less margin. Think about if you bought a building in 2013, 2014, it was near the bottom. You could have made a ton of mistakes. And of course, this is hindsight, right? But you could have made a ton of mistakes and you still would have been doing just fine. But go back to 2005, and let's say, Matt, you went and bought a property in 2005 and you made a bunch of mistakes. What happened?
I'd lose it probably.
You probably lost that property, right? In 2008, 2007, 2008, the market fell out. The bottom completely fell out. Now, that was a really bad recession, obviously. That was really bad for real estate, especially. But that's reality. That's what happens. And so why would I put my neck out there and getting into a new asset class that I'm not familiar with? So for those listeners who are going, wow, he's doing retail, he's doing multifamily, he's got an office industrial, he's doing senior housing. Like, I want to do that too. Wait a second, just be careful. If you're going to go do that, you want to make sure that you're protecting your assets. You want to make sure you're protecting your investment, your investor's investment. So make sure you're partnering with reputable people that have experience already.
Yeah, I think that's the key. I mean, when I talk to new investors who are trying to figure out what kind of real estate investing to do, I tell them, decide on one asset class and really focus on that really well. But you're at a point where you're able to expand, but the key point is you're partnering with people who specialize in those different market classes. So you're able to really excel as well.
Yeah. When I told the potential investor that I was on the phone and, we were just talking about that. And I said, well, I just recently did that, but this is what I did. And he's like, I would have invested in that deal. And that's the key is, can you feel confident in the execution of that deal? If it relies on you only and your lack of experience, how many mistakes will you make? And you just will. I make mistakes, Matt. I mean, we make mistakes all the time on our multifamily stuff, and we have a ton of experience. So how many more mistakes do you think I'm going to make on the retail stuff, on the industrial office stuff? I'm going to make way more mistakes than I make on the multifamily. I already make enough on that. And so let's partner with the right people so we can avoid some of the really stupid mistakes that are going to cost us and our investors a ton of money.
Yeah, I mean, everybody makes mistakes. I think that's just part of being a human being. Smart people learn from their own mistakes, but the truly smart people learn from other people's mistakes. So when you're bringing in these partners that have already made those mistakes and have already learned from them, then you're getting the best case scenario right there. And then I'm also curious, why retail right now? With the advent of Amazon and that's growing, and grocery deliveries, people are just ordering their stuff online instead of going to stores as much as they used to.
Yeah, great question. A lot of people think that Amazon and all these online have been such a big disruptor in the industry, and I would say they have to an extent, right? But what they haven't taken away is that retail experience, that people want to be at a retail center. They just do. They want to see things. They want tangible things. And also retail centers have really changed what they are. So if you look at some of our shops in there, so we're bringing in X Golf. Okay. X Golf is a video simulator for golfers. Minnesota has the most amount of golfers per capita. And so you're bringing in this video simulator, X Golf. People come in, they enjoy themselves. There's golf leagues, there's lessons, there's all kinds of stuff. And they come in the winter, which if you're in Minnesota, you got pretty long winters. I mean, it's It's October 20th. It snowed, 5-6 days ago. October 19th, it snowed 5-6 days ago. So, our golfing season is nearly over. I mean, if you're a diehard golfer, maybe you're going to be out for a little while longer. Maybe this weekend when it's going to be 70, but the last couple of days, it's been high in the, 30s with some wind, a lot of wind. And so you're not outside, you're in X golf, you're hitting the golf ball there. And so that's a business that's really helping the retail center out. We've got restaurants in there. Those, you can't go to a restaurant online, right? We've got an auto parts store. Can you buy auto parts online? Sure, definitely. But I think that's a store a lot of people like to go to get their vehicle parts. They want it right now. Something broke now and they want it now. They don't want to wait. Appliances, are they sold online? Yeah, but most people want to see them. And here's where these retail, when we talk appliances, when we talk auto parts, here's where, or clothing. Okay. That's clothing is huge. People want to go there. They want to try it on, and they might even order online, Matt, but they went to that store first, and then they likely make the purchase online through that store. Oftentimes these retailers now are requiring a little bit less space, and they have a little bit less inventory. And a lot of it is, well, you like that? Okay, perfect. We're going to order that and we'll get it directly shipped to your house. So the good retail shops have a good online presence, and they also have a store presence. If you look at Amazon, they've got storefronts, right? So I think a little bit of both there, but, and really spreading out who you've got in your retail. We've got Liberty Tax. We've got, there's all kinds of different, again, restaurants and banks and those types of things. That's still going to be needing a brick and mortar. Retail sales have really bounced back even since the pandemic.
So, I mean, there's other retail out there as well. How do you make sure that your retail is competitive with, the other options that are out there?
Yeah, good question. First of all, we are owners of the retail shopping center. We're not owners of the direct retail stores, but we are trying to look at our center and say, okay, what are the tenants that we really want in there? We want to make sure we've got a variety of tenants. Okay. We want to make sure we have some tenants that are that, that necessity type business. That was a big term during COVID where you had certain businesses that stayed open. We've got a liquor store there. Liquor store has been deemed a necessity. I think when times are hard, the government says everybody wants to get drunk. So we got to keep those liquor stores open. So we have a liquor store open, there. We've got, you've got some restaurants there, which weren't necessarily deemed, 100% needed. So those did close down, but just a variety of entertainment and shopping and necessity type businesses. We want to make sure they're strong businesses. They've got a good online reputation. They're very desirable. They're going to drive a lot of traffic. But as far as like the retail itself goes, we're looking for excellent location. We want top-notch premium prime location. So we have a location where we've got tons of vehicles driving by our property every single day. It's one of the busiest corridors in the entire Twin Cities. It's a really nice area, very affluent area. And it's a rundown, not rundown, it's not horrible, but it's a shopping center that needs updates. So we're just going to modernize it, make it look really good. And properties nearby look really nice. And so it'll drive highly affluent people to the area. And I think that's really important when you're looking at retail right now, is who is spending money. It's the affluent people that are spending the most amount of money and will likely continue when a recession happens. And so I think right now, real estate, and this is multifamily included, But real estate is all about location, location, location. It's never been truer. Today it is so true. And that's what we're basing all of our acquisitions on, is location.
That makes sense. I mean, you could have the nicest shopping center in the world, but if it's located in the middle of a shady neighborhood, then
Or
you're.
with just poor frontage, right? I mean,
Mhm.
that's where, an apartment, it's not quite as important to have the frontage, and it helps, right? But a retail is so important. Easy in, easy out. Am I driving by it? Look, if I am driving, Matt, and I don't see that there's a retail center there, I'm probably not going to stop by, right? There's so many knee jerk stops where people are like, "Oh, look there. Oh, let's stop." You know, and yeah, there's plenty of people that put it in their Google Maps, but if it's hard to get to, if it's just not in a great location, um, you know, hard, hard egress, ingress, just lots of stuff to think about.
Yeah, makes sense. And your tenants, you want them to succeed because they're going to retain, stay there for a long time and pay rent. And what sort of updates are you doing to help attract those affluent customers to help your businesses?
Yeah, a lot of exterior. So I mean, the parking lot definitely is in need of a resurface. So we're doing that. Lots of new lighting around to really jazz that up. We're doing some patios for some of the tenants that are there. We are doing some landscaping, and then the exterior facade. It's just a tired building that was built in the 80s that we're gonna just really put some nice finishes on the facade. Most of these commercial buildings, you got the roof, and then you've kind of got a um, false front that goes above the roof on it. Most of that can just be ripped off and redone. It's pretty inexpensive overall to do. And so that's exactly what we're doing. We're removing that. We're putting on kind of some nice wood, almost like a wood panel. It's hard to describe, but pretty modern, what a lot of the retail are doing, especially in that area, and just really jazzing up the outside to make it look really nice, to help drive more customers to that location. I mean, people want to shop where they feel like, hey, this is pretty nice. It's just how it is.
How do you underwrite it? Like I know how to underwrite multifamily, but retail just seems so foreign to me. Like what
Yeah,
are the.
yeah. Very similar, Matt. I mean, it's still profit loss, right? It's still how much rent am I getting in? How many expenses am I incurring? But I think here's some of the big differences. Okay, with retail, I've got what's called a triple net lease. You might not have triple net leases, but in our case, we do. And so the tenant then will pay a lot of your expenses, or all of your expenses. And so what we have is we have a lease, and this is a benefit and not a benefit. So with high inflation, it's nice to have these leases that are locked in, because our expenses just are being covered by the tenant. We don't have higher expenses. The tenant is covering those expenses. But the bad thing is I locked it in long term, and so their rents aren't going up as fast as what they could otherwise go up. So you got a plus and a minus, where in multifamily, I can continue to raise my rent every single year. I can go 10, 15, 20% if that's what the market is doing. With retail, if we locked it in for 3%, it's 3%. That's what it's doing. But at the same time, they're covering my expenses too. So with retail, I'll lock in, let's call it a 5, 7, maybe even longer year lease. We've got a rent escalator. We've got it spelt out what expenses they're covering exactly. The other nice thing is, Matt, when we do a parking lot, when we do a roof, everybody shares in the expense of that parking lot or that roof. And so if we're doing major renovations that are necessity renovations, not redoing the front facade because we want it to look nicer, that we can't charge back to the tenants. But if we're doing a parking lot that everybody's going to benefit from, that is a necessity item, we will actually take and charge that back to the tenants, and they'll have to pay their portion of that. So those are really cool things. that we can do. But you have to know that to be able to underwrite it. The other thing, here's a thing that I think a lot of people get stuck on or miss on with office, with retail, is that you've got leasing fees, and those leasing fees are expensive. And so I've got to pay a leasing broker to find me a tenant, right? And even if you find your own tenant, a lot of times they'll have somebody representing them. Okay. And so you'll have to pay that broker. And let's just say you got a tenant that's in your property already and their lease is expiring. You want to make sure you account for leasing fees. And you go, well, I'll just negotiate them myself. Well, maybe you negotiate that lease. You think you got it all teed up. And then a broker comes in and talks to the tenant and goes, hey, I'll represent you. And they go, why would I want you to represent me? We already have this lease signed. They go, well, what are you signing it for? Well, I'm signing it for $18 a square foot. And they go, hey, look, the property next door is going for 15 and this property over here is going for 14. I'll get you a better lease term if you'll just sign this with me. They'll pay my commission. I will negotiate on your behalf. And I'll get you your rent for, instead of 18, I'll get you down to 15. And they go, okay, sounds great. And so now you got to pay for that extension, that lease extension. You got to pay a broker. Now that doesn't always happen, but it happens a lot. And so you want to make sure you account for those leasing expenses. And then the last expense a lot of people forget about is the tenant improvement expenses, the TI. Okay. So leasing fees and tenant improvements, TI expenses. When I got a tenant that moves in, a lot of times they're going to say, hey, Mr. Landlord, we'll pay you $18 a square foot, but here's what we want. We don't have the money up front today. We can pay on a monthly term, but we don't have the money up front today to do the renovations needed to fix this place up, to get it to rentable space for us. So we want you to give us a credit of $25 a square foot so we can renovate this space. Okay, sounds good. And so we give them $25 or whatever we end up negotiating per square foot. And that's an upfront cost.
Okay. That makes sense. And then hopefully they're there for a while.
Well, yeah. So you're signing, 5-year, 7-year, 10-year leases, whatever it might be. And the shorter the lease, of course, the less you're going to give them in tenant improvements, and you're going to probably charge them a little bit more per square foot. And, if they're a high credit tenant, let's say you're signing a lease with a Starbucks, right? Well, okay, we know they're very low risk tenant, but if you're signing a lease with Joe's Coffee Shop that they just are opening their brand new business and they've never sold anything, that's a pretty high risk tenant. You want a personal guarantee, and that's a risky lease right there.
What's the lending situation like for the retail?
So it's hard to get the agency debts unless you're getting into big, big kind of more institutional type retail, industrial and so on. So usually you're going local bank, and that's exactly what we did. We went with the local bank, 25-year amortization, locked it in for, 7 years, 10 years, pretty solid interest rate, but that's kind of what you're getting as a local bank. Going to have to likely put some sort of personal guarantee. It might not be 100% personal guarantee, but 25, 50, 100% personal guarantee on the debt.
And what else were you surprised about when you started going into the retail, based on your background?
I guess pleasantly surprised, Matt, and I don't know about surprised, but pleasantly surprised by the professionalism between everybody. And now I didn't deal with the tenants exactly, but professionalism with the tenants, professionalism with the contractors, just a higher degree of, it feels like, professionalism within the industry. It felt like we're dealing with more competent contractors and just overall just more competent people. Where with multifamily, not that you're dealing with incompetent people, but it just feels like it's more of a cutthroat, industry, a lot more ma and pa, where the retail and the industrial and the office are just a little bit more professional and institutional grade feeling.
And did you get professional property management, or are you self-managing?
No, professional property management. Yep. And this is all they do is retail. Yep. So, I mean, look, we like it. We're excited for the opportunity. We think there's a ton of upside. There's opportunity to do a few different things too. We've got additional land with this building, so we can potentially do a ground lease or a build out where we can really increase some upside there. And so there's just a lot of different opportunities that we can take advantage of. The rents are very low. This was owned by a guy who just wasn't a great owner. And so the rents were low and the tenants weren't being taken care of. And so there's just a lot of meat on the bone in that case as well. So.
Nice. It's kind of a diamond in the rough there. It sounds like you found.
Yeah, I feel a bit of a diamond in the rough. I mean, there's definitely work to do. It's not that it's just sitting here primed and ready for us to go, but there's with I think a fairly minimal amount of work, we've got one of the best locations you could ask for, and just a lot of opportunities in there.
And how did you find this deal?
My partners brought it to me. One of the partners actually works for the company that, had the relationship with the seller.
Oh, okay.
So, yeah. This guy had tried to sell it for quite some time, and really hard to deal with guy. So it fell out of contract, and, just was a hard person to kind of deal with. Right up until the end, there was some silly stuff going on. And so, yeah, several people had it under contract and it fell out, and, nobody could get it closed.
Well, in a way, that's an advantage for you, because then it's scaring away all these other people that, would have gotten it for a similar or, better price. And you're able to go in there and.
Yeah. It's funny, Matt, I would say the vast majority of our deals that we purchase have been under contract and fell out of contract, either because of the seller or because of the market. We had a couple during COVID where, all of a sudden COVID happens and people are freaking out because the buyer's incompetent, whatever it might be. There's just been almost every deal. It seems like we're like the second or third one that they call or that, but I think these brokers know we can close. And so if it fell through once or twice, they know they don't have many opportunities. They'll call us because they know we can get it closed. I think one other thing that is maybe a trap too with retail is that vacancies can sit for a while. So it's not residential. It's not like a tenant moves out and the next tenant moves in the next day. This happens, tenant moves out. A lot of times that space has to become vacant before anybody even is interested in it. Sometimes you can pre-lease it, but a lot of times you're not. That space becomes vacant. Sometimes it's maybe not the highest and best use anymore for the space. You might have to white box it, which basically is you're ripping out everything that's in there and you're just making it a clean blank slate again. The right tenant has to walk in and want that space, and they have to want all of that space. Or if they want part of it, then now you have to figure out how can you divide that space? Does it make sense? And if you do, then you got to find two tenants for that space. Or maybe they want more space. And so you got to figure out if you can move another tenant. So there's lots of challenges that happen. And then they got to do their build out. And a lot of times you're not getting rent until that build out is completed. So that's another thing too, is your vacancy rates are, you need to underwrite for higher vacancy rates than you would in multifamily, just because you've got a lot more time as that unit becomes vacant. Now you might have less vacancy, but when you do have the vacancy, it typically sits for a little bit longer.
About how long is it usually between tenants?
Oh man, Matt, 1 month to 24 months. There's so many factors that play into that. But if you got a good location, you should be able to get, that tenant out and new tenant in and paying rent within, with retail and the type of center that we have, within a couple months. Well, I don't have anything else unless you got any more questions.
No, I think that's it for today.
All right. Have a fantastic rest of the day, Matt. Make every day Saturday.
Thanks. You as well.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.